Hello, everybody. My name is Graham Mode, and you are watching the Political Vigilante Making Gotham Great Again, folks. We have talked a lot on this show about how the Federal Reserve is not a federal government agency. They're not democratically elected people. It is basically just an illegal banking cartel is what the Federal Reserve is. Most Americans don't really, when you have the Federal Reserve, it's part of Congress or something. I'm sure if you just go like person on the street interviews, people would say, oh, it's part of the Congress, right? Or it's a division of the Senate or something. They wouldn't understand it's an illegal banking cartel. The Federal Reserve, Congress, I mean, even the Constitution is designed to protect the wealthy. This country was a tax haven for wealthy people. That's one of the reasons it was created. And we've talked on this show, even way before the pandemic, of a housing bubble. And the pandemic has only increased the size of the bubble with the trillions of dollars printed by both Trump and Biden, the Republicans and Democrats, showing you there's no difference between these corrupt parties. This notion that we just got to get out this guy and replace him. Like Trump was awful. Trump was awful. Okay, great. I don't like Trump. We got rid of him. Now we got Joe Biden. Everyone's like, oh, Biden's horrible. So they're going to replace Biden with another dumb Republican criminal. Swap out their Democratic criminal for the Republican criminal. So the whole system is a scam. And one of the things that I like about specifically Bitcoin was it was designed to take the power away from the central banks like America and the Federal Reserve and the IMF. And this CEO, and I got this from, is talking about there's a huge bubble brewing, mainly with housing. And the CEO said that it's a huge Ponzi scheme, basically. And so let's just get into it. And I when I find this, and this was in MoneyWise, and it was reprinted, reposted on Yahoo. So I always go through like the corporate mainstream media to see what they're talking about. And when they start talking about a recession is coming and it's going to be bad, I pay attention, because the Federal Reserve and people on CNN and CNBC, even recently, have been like, oh, we're fine. Not according to this guy. The biggest Ponzi scheme in history, the CEO warns that the Fed's strategy has created a giant bubble in housing. Here's what he likes for protection, right? He's going to go into that thing. But let's get into what he said. According to Dan Morehead, CEO of crypto hedge fund giant Pantera Capital, there is a third thing that the Fed has been doing, running a Ponzi scheme, right? We're made to believe that the Federal Reserve prints our currency and protects and the third thing he says is it runs a Ponzi scheme. Morehead says that the Fed's manipulation of the government and mortgage bond markets is the biggest Ponzi scheme in history. The expert investor even issued a warning on CNBC last week, saying it's likely that a recession is coming. And I want to point this out. He didn't say this on some, crypto YouTube show. He said this on CNBC. So we talk about the corporate media and how they like to shape the narrative and how they like to propagandize people. CNBC is part of this. CNBC is one of these outlets that's been like, oh, Bitcoin's a Ponzi scheme, until like the last 2 years, when suddenly they're like, oh, maybe it's a real investment thing. And even though Bitcoin has been down the last couple of months, and some people say, oh, it's a Ponzi scheme, I've done videos showing you, and I'll show you even more evidence this video, of how all the markets are down, including the stock market and crypto. But I said, the ruling elites know this recession is coming. So I showed you a couple months ago how they started pulling all their money out of the stocks and the crypto markets, and they're holding a bunch of cash because they know the recession is coming. And when the recession is coming, Bitcoin might even go, right now it's around $19,000, $20,000. It might go down to 15 or 12 or 13. And when this housing bubble pops and there's all these foreclosures and short sales, they're going to buy up everything. That's what they're doing. They've pulled all their money out of investment assets, crypto, stocks, whatever, and they're holding onto a lot of cash because they know cash is king during a recession. So they know this is coming. They probably helped create it. It didn't just flat out plan it. And he's warning you, and you should listen. Because when someone within the corrupt system is saying this is bad, then that's when you that's when you got to pay attention. It's one thing if people outside of it are saying it's corrupt, it's bad, a recession's coming. But when people inside the system go, ugh. Inflation is no longer 2.3%. The latest Labor Department report showed that consumer prices rose 8.6% in May from a year ago, marking the biggest increase since December 1981. And that's what's tracked. That's using their conservative math. I mean, you and I, look, if you've been to the grocery store in the last 3-4 months, it's more like 15 to 20%. I'm sometimes seeing 20 to 30% increases on certain stuff. No, I buy super healthy organic food, which thanks to Monsanto, organic healthy food is more expensive than awful processed food that, you know, has pesticides and GMOs in it or whatever. But this is a conservative number and it's up. You see what I'm saying? When they're giving you conservative numbers and they're like, ooh, these are getting up there. Again, the number is probably double this. It's probably 15, 16, maybe upwards of 20%. So according to their conservative metrics, it's the largest increase since 1981. This is the biggest inflationary numerical rising in 40 years. That's something to pay attention to. And I've been talking about all these bubbles, the student debt bubble, the car loan bubble, the housing bubble. I was talking about these before COVID. COVID just made them worse. The combination of shutting down industries and people not being able to work, and then the United States not giving money to its citizens. People are still paying or facing rather foreclosures. They're behind on rents. I knew a comedy club that was $100,000 in the hole. And they were like paying their rent currently, but they had $100,000 in back rent that they owed their landlord. This is a comedy club, which provides not just jobs for comedians, but for the bartenders and the waitresses and everybody else. So this isn't good. And I've shown you this recession. They know it's coming. July 28th, when they do the like GDP announcement, and they'll notice we'll have 2 quarters in a row of decreased GDP. That's one sign of a recession. And over 4 or 5% inflation. Well, now we're at 8.6. So it's coming. And when they announce it, that'll give companies the justification in the mass layoffs. So that'll happen. The mass layoffs will come, which I think some of these companies are like, maybe a recession's good. Because, you know, you see like Target and Chipotle are like, we'll pay you $22 an hour or whatever. People don't want to work, or they're doing other jobs and they're having a hard time hiring people. Well, they're looking forward to the recessions. Amazon, you know, thanks to Chris Smalls and his team, just got a 3rd warehouse unionized. So Amazon probably can't wait for the recession gun to be shot so they can go, oh, we got to lay people off. You sure you want to go on strike? You sure you want to force this union thing? Because when people are scared and hungry and lost their jobs, they'll take any job. That's what I think they're banking on. That's what they're banking on. They're going to put there's been over 100 Starbucks that have been unionized. I think they're going to just start laying people off. The CEOs won't take a pay cut, of course. You and I will. We'll all have to suffer. But this is part of their bigger plan, right? While the low interest rate policy was a mistake, Moorhead says, it is dwarfed by the Fed's manipulation of the government and mortgage bond markets. Now, I don't know that much about the bond markets. I'm not going to sit here and pretend that I do, but I'm no financial expert. I just have been paying attention from doing this show and really paying attention to the crypto markets the last 2 years because I see how powerful they are. Anything that can get us all out of the, you know, basically indentured servitude of working in late stage toxic capitalism, where they want you to have 2-3 jobs and they want you to have your credit card maxed out and a car payment. They want you in debt, overworked, and too busy and tired to go out and strike or protest. You know, that's what they want. So, but when this guy that's a CEO who understands these bond markets is saying this is when I listen. Now, I'm sure you could go right now and any, Business Insider, Bloomberg, whatever, CNBC, and find some article of another CEO that says, "Oh, this guy's nuts." I'm sure you could probably find that. So I'm not saying like this guy is the holy grail, but I pay attention, and because he owns a crypto platform, that makes me think that he at least understands the value of crypto. They forced 30-year mortgage rates to hit 2.68%, basically daring people not to buy a house or two or three, which would obviously create a bubble in housing, which itself contributed to the labor shortage as 2 million Americans retired early or otherwise left the workforce. I didn't see that. I didn't connect those dots. That was what stood out to me in this article. So keeping the interest rate so low, it's like money's cheap. And a lot of people weren't putting houses on their market, so it drove the price up. We've talked about that on the show since the pandemic. The housing market, there's not a lot of inventory because people decided we're going to just work at home. And because interest is so low, we'll take out a line of credit because we have a lot of equity in our house, and we'll just, do some improvements to our home, thus increasing the value. Or we'll make, since, whatever, one of the spouses, one of the spouses is staying home working remotely now. So they're making good income and they're doing it remotely. Oh, we'll just, fix up the office or whatever. And with the interest rates so low, it's like, man, well, you can get, that's next to nothing, right? So you could get a big home loan for a low interest rate. That's what he's saying, daring people wow, let's buy a second house and use it as an income property, which he's equating. This obviously creates a bubble in housing, which contributed to a labor shortage. Is 2 million Americans retired early or otherwise left the workforce. So we talked about that last fall was the Great Resignation. 2 million people left the workforce, either retired early. And I'm sure like part of it was, well, our house has gone so much up in value, we'll sell it and live off the cash or whatever, or just, buy an investment property that brings us in a positive cash flow or whatever. So this is an interesting correlation that the CEO is making, which again, we talk about on the show, Follow the Money, Connect the Dots, Get the Truth. So Moorhead expects interest rate hikes to impact bonds, stocks, and real estate, but there are asset classes that are less correlated with the interest rate markets. And this is something that I've suspected when the recession hits and the housing, and I think the other thing too, when people start getting laid off, I've already seen since the June 15th the Federal Reserve hiking the interest rates 0.75%. I've already seen, just where I'm living, more places up for sale, more people going, oh man. When the layoffs start happening, people are going to start having to sell their homes. And I've shown you these big hedge fund management companies that are waiting for all these houses so they can snatch them up, because their goal is to buy up everything and then rent to everybody and keeping the prices going up so that it's near impossible for people to buy. They want to own everything and then make you pay rent. They don't want you to own, because then they want you in there, right? Beholden to them. So this is what he says. If the recession and the housing market crashes, I can easily see a world in, say, a year when stocks are down, bonds are down, real estate's down, but crypto is rallying and trading on its own. That seems like it could happen because a lot of people, and I showed you several months ago, these big hedge funds and big money people have pulled their money out and they're just holding on to cash. So when everything goes down, they know this recession is coming. So they know Bitcoin could even go lower. And like, if they could get a bunch of Bitcoin, imagine like if you have whatever, $10, $20 million in cash reserves, you're some hedge fund or whatever, or you're just a rich person with a couple $1 million. Well, the difference between buying Bitcoin at 20 grand and 10 grand is huge. And knowing there's only ever going to be 21 million Bitcoins ever mined, if you can own a big chunk of them, you're going to be in the next 5 to 10 years when Bitcoin goes up to 100, 200, 500, a million a coin, whatever, the sky's the limit, as Max Kaiser said when he was on this show. They know this. So the recession drives the price down, and then just consumers that are like, oh, scared. Oh, I just got to cash. Bitcoin's a Ponzi. I don't know much about it. I bought it at 50 grand. Now it's down to 20. I'm selling. I don't want to lose any more money. I'm out. That's what they're hoping for. And that's what's happened. So they know that when everything goes down and the recession hits and the housing market is going to crash, the housing market, at the very least, the housing market's going to take a big drop, if not a full-on crash. It is going to take a big drop. They're going to snatch up all the Bitcoin. And then the Bitcoin price is going to start going up. And here's some evidence to show you why and how that's going to happen. Bitcoin, the world's largest cryptocurrency, is down 57% year to date, but has still returned over 900% over the past 5 years. That's what these financial people look at. They don't just flip out and jump on the, the FOMO train. Oh, I got to buy when Bitcoin's at 45. Now it's at 50. I got to buy some. And then when it drops to 25, they go, oh, I got to sell. They don't do that. They look at the 5-year trend, and Bitcoin is up 900% over 5 years. Remember in March of 2020 when everything got shut down because of COVID and Bitcoin crashed to about $3,800 a coin? It was at about 9 or 10,000. It crashed. And then 1 year later, March of 2021, Bitcoin was at like 40 or 50,000. And how do I know there's a bunch of people with cash waiting to buy? Because the blockchain tells us so. $25 billion of stablecoin dry powder amasses on crypto sidelines. Dry powder means like ready to explode. So just to clarify, this is why I like cryptocurrency, because the blockchain is transparent. So there's $25 billion in stablecoins. It is a bunch of people or investors, institutions, whatever, just waiting to pounce. So the minute Bitcoin starts going low, meaning below 19, it starts to, when the recession hit, it's going to go down. People are going to get scared and cash out, and they're hoping regular Bitcoin owners like you, just like, oh man, I own, $5,000 worth of Bitcoin. I got to sell it. I got to cash out. We need the money. We lost our jobs. We got laid off or whatever. When it starts going down, when it gets down near 15,000, if it goes below 15,000, then this 25 billion is going to get whoomp. People are going to start buying. And when it'll go below, it'll hit, and it won't stay there long. You'll see it down 12, 13, and then everyone will start spending the money, and then it'll go up and up and up. And once it starts going up quickly, then this money will get unleashed, because everybody will want to get in under 20 or at least under 15. If you can get it under 20, they're waiting for it to go down lower. So when this gets unleashed, then it's going to jump back up quick. And then Bitcoin's going to start going 20, 25. And all these people that pulled all this cash out these last 6 months, which they've been pulling out for at least 6 months, right? The recession and the inflation started at the beginning of the year, right? Gas prices started going up. When that happens, then all this institutional money that got pulled out of the markets and has been just sitting on the sidelines waiting to jump in is going to happen. And they're going to do it. They're going to jump into Bitcoin, mainly Bitcoin, some crypto, but we're seeing some of these crypto exchanges, these altcoins going under, this stuff is like Terra Luna, all this stuff. People are like, I don't know, but Bitcoin, they know, is digital gold. So be careful and pay attention. If you have a little cash, I'd hang on to it and wait for Bitcoin to drop even further and buy some, because then Bitcoin's going to go up and up and up. And that's where this happens. People have done this with gold for years. They know a recession's coming. They pull out their cash, and when gold drops, they put their money in gold. And then typically commodities, gold, soy, those always go up in a recession when the markets are down and real estate's down. So this is their system. Follow the money, connect the dots, get the truth. I'm not a financial advisor. I'm not an expert. I'm just paying attention to what these people are doing. And I don't want you to get whacked. I don't want you to get taken out. I lost my house in the last housing crash, 2008. And I went a 16-month battle. And I thought, oh, Obama's going to come in and save the day. He didn't. Bush and Obama gave the banks over $1.5 trillion. And they let the banks steal 6 million people's homes. Mine was one of them. So that's why I got so into Bitcoin and crypto. And I'm waiting for it to drop too. So that's what, and this is the single greatest opportunity for regular people to amass wealth, right? You don't have to have that crystal ball like, oh, I should have bought Apple stock 30 years ago, or man, you don't have to do that. Here it is. It's now, it's happening. So I have a bunch of affiliate codes. And I would, if you already have some crypto on exchanges, I would get it off and put it on, I would put it on a cold wallet, because some of the exchanges are going to go under because they've gambled with your money, some of them. So all those things I've been talking about, it's starting to happen. And I want you to be prepared. Follow the money, connect the dots, get the truth, and shave your knuckles for justice. Boom.